In this video, I will explain everything you need to know about ETFs or exchange-traded funds in a simple way so you can understand what they are, why they are popular, and how you can start investing today. An ETF or exchange-traded fund is a financial product that pools money from many investors to create a single investment vehicle. This pooled capital is then used to purchase a diversified collection of assets such as stocks, bonds, or other financial instruments. Essentially, buying an ETF gives you exposure to many different investments at once, without the need to buy each asset individually. How does an ETF work? When you purchase shares of an ETF, you are buying a small ownership stake in the entire basket of assets held by the fund. ETFs are traded on stock exchanges just like regular stocks, and their prices change throughout the trading day. This means you can buy or sell ETF shares any time during market hours, unlike mutual funds which only trade once per day. ETFs offer several key benefits that make them attractive to investors. First, they are cost-efficient. ETFs typically have lower expense ratios compared to actively managed mutual funds, which can significantly improve long-term returns. Second, diversification is built in, because a single ETF contains many different securities, reducing the risk of relying on one or two investments. Third, ETFs are tax-efficient. Their structure often results in fewer capital gains distributions compared to traditional mutual funds. Fourth, they provide flexibility, allowing investors to trade throughout the day at market prices. Finally, ETFs give easy access to different markets and asset classes, including stocks, bonds, commodities, and even international markets, all through a standard brokerage account. There are many types of ETFs suited for different investment goals. Stock ETFs track market indexes such as the S&P 500 or focus on specific sectors like technology, healthcare, or energy. Bond ETFs provide exposure to government, corporate, or municipal bonds, providing steady income. Commodity ETFs allow investors to invest in raw materials, such as gold, oil, or agricultural products, without directly owning them. International ETFs enable exposure to foreign markets from developed countries to emerging economies, giving investors global diversification. Who uses ETFs? They are ideal for beginners because they simplify the investing process and allow someone to build a diversified portfolio without needing deep knowledge of individual companies. Experienced investors also use ETFs as tools for strategic asset allocation, tactical trading, or fine-tuning their portfolios to achieve specific market exposures or risk management objectives. Starting with ETFs is straightforward. First, open a brokerage account with a reputable online broker. Next, research ETFs that match your financial goals, risk tolerance, and market interests. Consider the sector or asset class you want to access and review the ETF's expense ratio, historical performance, and liquidity. Finally, place an order to purchase ETF shares through your brokerage account and begin your investment journey. By understanding what an ETF is, how it works, and why it can be beneficial, you can make smarter investment decisions and gain exposure to a wide range of markets. With ease, ETFs are powerful tools that combine simplicity, diversification, and flexibility, making them suitable for investors at all levels.